All right, good morning, everyone. Happy Monday. It's 6:35 a.m., June 8th. Price of Bitcoin currently at 97.40. So the first thing that I wanted to mention is I discussed this trading range last week when we were chopping around sideways and then we start to break down. So you could see, again, we have re-entered back inside that trading range, okay? Last few times we actually hit the bottom right there a couple times and then just rolled over. So it seems like right now we're coming back inside that trading range that we consolidated previously and then rolled over. Now, typically what this means is, okay, well, we're again coming back a little bit deeper into resistance, and it's possible from here we might break up. But if we start breaking below this trading range again, kind of doing something like that, then we're probably going to roll down further. And that, in my opinion, we're probably going to take out this low right here. Okay, so we put in this low, I think, yesterday, right? And then we spiked up really, really fast. So I'm thinking that this time around, all right, because we took the liquidity here, we're going back inside the trading range. If we cannot stay up here and push higher, that means we need more liquidity below. Now, this is where things get interesting because if you're going lower, you're kind of breaking a higher time frame structure. So the first thing that I want to show you is on the 4-hour time frame, if you look across the board, right, this particular area right here before we consolidated and then dropped off, you can see right around that area is where prices come to multiple times, right? Multiple times, like right there, dropped off. Pushed past this, dropped off. Again, coming back towards that same area, and if it starts breaking that, right, what we would expect is that this June monthly open, which is around 94.45, is probably going to get taken out. If that's the case, if that gets taken out, I probably figure we hit this low area down here. I've showed you guys how to identify where the bigger players move in and out of the market. All you do is you simply take this fixed range indicator and you identify where are the high volume nodes. You can see the first high volume node is right there, 95.25 right now. The next one below that is way the heck down here around 88.50. If you take out this high volume node, you not only take out the majority of players who were potentially long right here, but you also take out the June monthly open. Now, in my experience, whenever you take out the monthly open, you start heading down pretty rapidly. So if we're looking at this structure right now, it is very critical for the bulls to hold the price here or at least above 95.25. You start breaking that, and it's a pretty slippery slope on the way down. But until then, the bulls technically have the upper hand right in this area, okay? Because if you think about it, you know, we've put in some consistent higher lows right here, right? Obviously ignoring this wick because this was only on BitMEX. You know, for the most part, these are all higher lows. However, the one thing that most people are not still seeing is the larger time frame structure, where I've stated over and over again that this is still big resistance right up here. This is all supply. So every time prices come towards this area, right around here, even stretching back to September 2019, so from here we dump, come back up here again. Actually, let me make this a different color so you could see. Let's make it red, right? So this is all supply from way the heck back here in September. We dumped, came back here in October, short squeeze, we dumped again. Again in February, we dumped again. It is a slightly larger range, so it's a couple $100 in my opinion. But I think if you were to look at one finite marker, it would be this key high right here, 10,584.5. Because over here we created a lower high, 10,550. Over here we created another lower high, which is 10,474. So these are not equal highs, okay? These are lower highs consistently. So at these lower highs, you understand that there is still pressure on the market from the sell side up here. Obviously, if you break up through this, the whole story has changed. The game has changed because then you open up doors to 11,000 or 12,000 easily. But that's not the case. We're still right under significant resistance. And with the way the market has kind of moved in a almost V-style recovery or a parabolic fashion, I would not be surprised if we consolidate here for maybe another a week, 2 weeks, maybe even till the end of the month, and then we make our real move, whether it's up or down. For now, I'm still sticking to my short bias because in terms of a swing trade, this is by far the best risk to reward you can get. Because from here, if we're taking a short, my stop is up here, above these areas of resistance. My target is at least 75, 7,600. That already is a 2.36 risk to reward ratio. Quite possibly, if we break that, I would not be surprised if we make it back at least towards like 6,700, 6,800. Break that, and we can easily take out the previous low way the heck down here, the 3,600 low. So you can see the risk to reward greatly increases if each of these levels on the way down don't hold. But nonetheless, I do want to let you know that over here, I'm still bearish. I don't think I've seen anything else to show me that we have to break up from here. In fact, I think there's more signs to tell me that we're possibly going to roll over. A few of the signs that I've stated before are, aside from this triangle looking like, okay, well, we can't get past this trend line. We see the OBV, which is the on-balance volume, rolling over. What we've seen over here, which is the CME indicator, where you identify open interest, non-reportables, which are your retail traders. Some of them are professionals. These are still more long. Non-commercials are your hedge funds, which again are still more short and have a larger short exposure. Okay, so fact of the matter is, I'm still thinking that, okay, yes, open interest dropped because of that possible big spike that we had over here, but then again, it seems like a larger chunk of the players, which are the hedge funds and the bigger professionals, are still short heavy. Okay. On top of that, we've also talked about this indicator right here, which is the hash rate capitulation indicator. Right. This talks about the mining capitulation. You can see the hash rate, the raw hash rate right here, spiked up really high just yesterday. Now, as far as I understand, I had to ask someone for an explanation of the hash rate actually changing. Supposedly, it actually means that it will be more difficult to mine. So, in fact, more efficient, or rather inefficient miners will possibly find it even more difficult to mine because of the hash rate getting more difficult. Okay, so that paired with the OBV, paired with the basics of technical showing you that we are still near resistance, paired with what I showed you about the CME open interest, as well as the non-reportables positioning and the non-commercials positioning, which are, again, your hedge funds and your institutions. It just goes to show that there are more reasons that we are shown by the chart. And again, this is not my bias simply, it's reasoning behind the technicals, reasoning behind the data that are showing us that it is possible that we're better to be short here. And last but not least, this is something that I noticed yesterday as well. And again, I'm not the biggest fan of fractals. I don't think that just because you see a fractal, it has to play out. But, it's something interesting to know, okay? So here is a big run-up that we had, and then, big rejection, and then price climbs back up again in this kind of area, and then starts to roll over, okay? I want you to specifically pay attention to this area right here, okay? If you look at this big candle and then this kind of, I wouldn't call this a Greystone doji or anything. Let's just call it a doji for now, right? So nonetheless, right, you see this candle with this kind of slightly higher volume, okay? So this is after, we kind of created top, pushed down, pushed up a little bit, and then start to roll over. Okay, so come back over here. Again, we see, just like back here, we see a big move to the upside, see a big move to the upside. Strong rejection, pulls back down, bearish candle, and then bullish engulfing candle right there. And then follow up the second week, which has a slightly higher volume right there, just like this one, but then starts to roll over. Okay, so I'm thinking that, all right, well, it looks like we cannot get past these highs back here, yet we also are not able to close above where these two candles right here open and closed, right? Okay, so we barely did that. Let's check that out. So you can see over here, again, same thing. These two weekly candles right here, and you can see this candle pokes past those opens and closes, but then rolls over. Right here, same thing, pokes past it, and then hopefully this week we see that roll over. And again, I don't know if it's going to play out in the same way or at all in any similar manner, but it's just something important to note that the structure is quite similar, where we had a big push up, strong rejection or a rollover, and then over here we see that candle kind of spiking up, maybe trapping some people up here, and then starting to roll over back down again. So we'll see how the end of the week goes. We still have about 6 days, 6.5 days to go. Nothing really special on Ethereum. Let me see here. So I've been paying attention to Ethereum with, this kind of movement right here. That if we start looking at, let's just say, let me see here. Let's grab a new chart, actually. There's too much stuff going on in that one. Okay, so actually this is a little bit more clear. This trend line, which I've noted from back here, right? You can again see price kind of consolidating under that. And then again, if we push past this, I mean, we could easily get up towards these highs around 287, 290. I would probably figure that we kind of inch up here and then start the rollover, because that would be hitting the nice trend line resistance for Ethereum. I don't quite see any reason for Ethereum to start breaking through. If it does, it probably means that Bitcoin is also going to break through, because so far, I have not seen that many cases where Ethereum, if it starts leading the market, whether it's up or down, that Bitcoin doesn't follow. More often than not, it is the case where Bitcoin does follow. Now, if you didn't know that trick, it's a nifty little trick to keep in mind, where you could just keep an eye on Ethereum and see if it's making aggressive moves up or down, if it's breaking its structure. And if that's the case, then it's possible that you can maybe make a directional move in Bitcoin in the same way where ETH is breaking out. Just something interesting to pay attention to. Let me see. So nothing special on Ethereum. Again, like I said, I think in this particular area right here, this is something that you can call the larger trading range. Wouldn't really call this wick anything, just a big, deviation. So I'd probably say this is the larger range that we're in. And if we picked up the fixed range on ETH, let's see where for Ethereum from this high to where we are. Let's see. So we're actually right at the point of control right now. So Ethereum technically needs to hold this area. Actually, let's pull this back a little bit. Okay, so if we drag that down, this is still a high volume node, but this is the larger point of control. So way the heck down here around 237.47. So Ethereum needs to hold above this area to still stay bullish. Okay, if it starts cracking this area, it'll at least get down here around 237. But same thing goes with Bitcoin, right? I showed you guys there was two larger volume areas for Bitcoin, one up here, one down here. So you can see there's always similarities between Bitcoin and Ethereum. Now, that may be because they're traded in the same manner in terms of algos, or professionals just have Bitcoin and Ethereum being traded the same way. Hard to say. But anyway, so you guys understand where I'm coming from when it comes to the larger time frame analysis, the smaller time frame. And even over here, you can see how tiny the candle spreads are, right? I think you just need a big down candle from here with high volume to sort of cement the top, okay? Yesterday, we took a unofficial trade right here. And again, unofficial trades are setups that I find that are useful in identifying long positions, or long or short positions, but technically, not ones I will be actively taking. The positions I take are always in these channels, okay? And so you guys know that I'm currently still in my short position. My average is 97.10. Let me see. I think I had put up a screenshot from 9400s. I got to put up another screenshot of where I'm pretty much average. I think it's like 97.25 or something. But I'll see. But yeah, so I am still short. This is my larger swing short though. Okay. But then on top of that, we have separate trades that we'll take where I can also be long on my other account or go long on Coinbase or whatever other exchange that people are trading on. So it's not necessary that, yes, because I'm short, I'm not going to take any trade. I have other accounts that I can long in, okay? So with that being said, yesterday we took a quick unofficial long trade right here, okay? So this was right at the monthly open, right? A level that I've been talking about for a while. And all we had to do was, let's see here. All we had to do was look at this area right here as a potential bounce zone, because remember that this was the monthly open. And so we just waited here, bought in a long right around 94.50, 94.75, stop just below, take profits right around 95.50 and 97.75. All right, and then after that, we pretty much let go of the trade. All target profits got hit. As you can see right here, all of them got hit, and that's it. Then you wait. Okay, so being able to stay patient and wait for your next trade is critically important. If you keep trying to trade in and out of the chop without actually having a game plan, you're going to lose money. Okay, so that's pretty much it, folks. Hope you guys enjoyed the analysis. Hit the thumbs up if you enjoy my content. Leave me a comment of your thoughts. And then also, like I've stated before, we have a 50% discount going for June. If you're interested, message me. All right, that's it. Come trade with us. And until then, take care.